All right. Okay, we're going to go ahead and get started. Thanks, everyone, for jumping on with me. My name is Justin Carbonell. I'm one of the partners here at Validea. And today we're going to spend a little bit of time walking through the Validea website. Specifically, I'm going to be showing you how investors use the various tools and research on Validea to find new investment ideas. And we're going to be walking through actually a couple key features. We're going to start with our Guru Stock Screener, which allows you to screen for stocks that pass one or many of the Guru strategies that we emulate and that we offer here at Validea. I'll then walk through our ratings changes, the My Validea section of the website, which is like an email alerting feature. And then lastly, we'll look at the ETF screener that we've developed that can help investors identify interesting new ETF investment ideas. But to start out, we're going to look at the Guru Stock Screener, which is a screening application that utilizes the active stock selection models or Guru strategies that we follow here on Validea. If there are people that are new to Validea on the webinar, you may or may not know, but what Validea does is one of the things that we do, we've been doing this for a long time, is taking the strategies written about by legendary investors. So people like Peter Lynch, Warren Buffett, Benjamin Graham, John Neff, David Dremin, and a number of other sort of successful investors that have written books or academic papers. We've basically extracted those strategies and built computerized models off of those publicly disclosed sources and strategies. And then there's, over the years, we've continued to develop that system, and we've continued to round out sort of the strategy lineup and the strategy set with other approaches that are either written about or publicized in academic papers or written about in books. And so the key thing for us when we capture a strategy on Validea is it has to come with either a long-term track record of success, either in the real world or a back test. The strategy has to be publicly disclosed. So it has to be either in a book or academic paper or other source. And lastly, it needs to be largely fundamental. So that basically means that you can utilize computerized models to rank and analyze those various fundamentals and, or in some cases, momentum statistics that are utilized and looked at in these models. So that's just an overview for people that are new to Validea, sort of what we actually do here with these Guru strategies. And then you can do once you have those strategies in place, you can do a lot of different things with them. And so today I'm going to show you how to uncover new investment ideas utilizing those models. So to start, let's look at something we call the Guru Stock Screener. So all I did is I went here and went under research and then Guru Stock Screener. You're going to see there's a lot of different options and tools under here. But for today, we're going to focus at least the beginning part of the conversation on the Guru Stock Screener. Let me just click into that. Okay, so when you click on that, what you're presented with is a page with a lot of different drop downs. So to start, what I wanted to do is show you how you can start to screen for stocks that pass one or many of these Guru strategies. So in this first box, we're saying filter by individual Guru strategy. So here are all the different strategies on Validea that we run. Now, one thing that I'll point out, you may not know, at least initially, what goes into each one of these investment models. But for the purposes of this, let's just assume that when you come in, you're familiar with the Peter Lynch, which is basically, we call it the PE to growth investor model based on Peter Lynch's book, One Up on Wall Street. But essentially what Lynch espoused, the stock picking strategy that he outlined in that book, was essentially a growth at a reasonable price type investment strategy. So that's looking for growth stocks that are trading at what are reasonable prices. And there's a number of different investment criteria that go into the model. And we'll actually, once I filter this screen and we work down into some of the individual names, I'll actually click into the Lynch model. I'll click into one of the stocks so you can see sort of the criteria in the model. But the point I'm trying to make here is you might not know what goes into these models. And so it will take a little bit of work up front to figure out, okay, what strategy should I even be screening on? What strategy should I be attracted to based on how, you think about investing in the types of stocks you're looking for. And the way that you can learn about those strategies is you can, under this guru tab, you can toggle between the different gurus and the different individual names to learn more about the strategies themselves and what goes into it. You can also use other tools on the site to uncover what criteria is being used. But for the purposes of this, I just thought, well, let's start with the Peter Lynch method. A lot of people are familiar with Peter Lynch. And so what you can do here is you can say, okay, according to the Peter Lynch model on Validea, you want to see stocks that pass with either strong interest or summer strong interest. Now, the difference between these two options is strong interest is generally stocks that score 90% or better. Summer strong interest is generally stocks that score 80% or better. So if you select strong or some interest, you're going to get, and I just selected that and press add. It's going to add the criteria. You're going to get a big long list of stocks that pass the Lynch strategy with at least an 80% score. So that list is obviously way too much to deal with. It's way too long. But if we want to remove that criteria and add Lynch again, and then say just strong interest only, but that at least gives us a nice starting point to work with. So that's at the very highest level. That is how these strategies can be utilized in the stock screener. You could pick one strategy and then look for stocks that score high according to that strategy. Our information is updated on a daily basis. So any model that uses a price-sensitive criteria, something like the PE ratio, price to sales, any really valuation metric, that is going to be determined based on the price of the stock. That's going to be updated on a daily basis. And then obviously strategies that use momentum and relative strength and things like that, those are also updated daily. But as quarterly figures come in and annualized figures come in, those are updated as they're reported out by the company. But let's just say we want to say, okay, let's start with the Lynch model, but let's add another strategy we might be familiar with. Some investors might be familiar with Warren Buffett. So we base our Buffett model on the book Buffettology, which we feel is the book that does a really good job of outlining, at least quantitatively, the way that Buffett might look at analyzing stocks. So if we add Buffett here with strong or some interest, now we're basically saying what stocks are at the intersection of the Peter Lynch approach, which again is a growth at a reasonable price model, and the Warren Buffett strategy, which, as I know, is a large cap, mostly quality type of model. So here we got a very narrow list of a number of companies that score high. Some of these names you'll be familiar with. Here's Intel, United Health Group, CBRE, Progressive Corp, Cisco's in here, Big Lots, the retailers in here. So just by adding the Buffett model in, we were able to get that list down to a much more reasonable, manageable list. When you come down this page, you're going to see the table with different fundamental criteria in here. So we're showing you for Intel, the Lynch score, the Buffett score. So this gets 93% from Lynch, 93% from the Buffett model. How many gurus pass it with strong or some interest? So Intel actually scores high according to a couple different strategies. We then get the price, the market cap, some valuation metrics here. I'll try to make this a little bit bigger if I can. That way you guys can maybe see it better. And some other statistics like long-term growth rate and the dividend yield. As I mentioned before, I'm just going to kind of go off the guru screener for a second, but I'm going to come back. Anytime you see a ticker symbol on the site, when you click into this, when you click on that ticker, what this is going to do is going to bring you to the detailed guru analysis page. I'm not going to spend time talking about what guru analysis is, other than this is the actual analysis of Intel through the lens of the Warren Buffett model. So here is where you start to see all the criteria utilized in the Buffett strategy. And you can obviously toggle between all the different models on Validea. So we know it scores high according to Lynch and Buffett. If we clicked on Lynch, you're going to get a completely different set of criteria, and we tell you why the stock passes or fails that specific strategy. So that's important, because as you get more familiar and you use Validea more, you can start to see, using the guru analysis, actually the different criteria used in the in each model. And I think that can be extremely useful investment ideas. So you can combine a lot of different strategies together. There's a lot of different, I guess, variations or combinations that you can use when looking for stocks that, might pass muster and pass these strategies with either strong or some interest. So let me just remove these criteria and show you another way that you can use the guru strategies to find new investment ideas. You can also filter for stocks that pass multiple guru strategies simultaneously. So here what we can do is we can say, okay, I only want to see the stocks in the Validea database that get high scores, let's say strong interest, from 5 or more models at the same time. So if we pick 5 guru strong interest, we add it, we're going to get a list of stocks here that score high according to at least 5 strategies. What's interesting here is you got 2 home builders in here. So we got Pulte Group, Renewable Energy, Rent-A-Centers in here, Best Buy, DR Horton, Greenblatt, United Health pops up again, HP, Luke Oil, which is a Russian oil company, and this Generac Holdings, which I think is the probably the generator company. So that's pretty, I mean, when you see like, Pulte with 6 strong, 3 some, I mean, that stock looks very strong, at least from a fundamental standpoint. So this probably means it passes both value and growth type strategies. So let's see here. If we click in, so what gets to the top, Pim Van Vliet, 100%, acquires multiple based on Tobias Carlyle 94, Twin Momentum 94. So yeah, I can just tell you it's a combination of, there's a lot of growth strategies, but also some value strategies are picking this up as well. So that's why the stock scores as high. So this is a good way to, I think if you don't know necessarily what guru to follow or what guru to screen on, you can start looking for stocks that pass multiple strategies simultaneously, because at least if it passes, let's say 4 or 5, or maybe even 6 strategies with strong or some interest. From the view of a fundamental investor, things are looking good and solid with that company. And that can give you, I think, a starting point for finding names to look at. If we actually open this up to strong or some interest on 5 gurus, we're going to get, oops, let me see. I got to remove Buffett here. See, I didn't remove Buffett. So that was actually, so I had my Buffett one was still on. So yeah, when I go 5 gurus strong or some interest, I get a much longer list to work off of. So just to recap, there's 2 ways you can use the guru strategies. Before I get to the next part of the screener, there's 2 ways to use the guru strategies. You can screen for stocks that pass 1 guru model. You can combine guru models, whichever ones you want to, or you can look for stocks that pass multiple guru strategies at the same time. Let's just keep this. We're going to keep this on this stocks that pass more than 5 strategies with strong or some interest. As we move down into the next section of the site, this is where you can even get more specific and add in a lot of different filters. So here we allow you to filter by sector. We allow you to also filter by industry. So let's just choose technology. So, we got a handful of technology names that have passed at least, let me make this a little bigger too. Handful of tech names that pass our models 5 or more. You can then, under the technology, you can add in different industries. So once the technology sector is selected, you can add in different industries if you want. You can also sort on different countries. So our investable universe, or the data feed that we get, is specific to it's companies that trade or stocks that trade on the US exchanges, but that will have ADRs. So we have about 600 to 700 ADRs in our universe. And ADRs kind of tend to pop up maybe a little bit more in financials and or energy related areas when you think about overseas markets and some of the larger companies from, let's say, Europe or Asia. So that's just a note if you're wondering when you filter on countries, what types of shares you're looking at. You can also add in a bunch of different general value criteria and other criteria. So in these drop downs, there's a lot of different things you can sort on. You can add in a market cap requirement if you only want to, let's say, if you want to focus on small, mid, or large caps. We've got a bunch of valuation statistics, the trailing PE ratio, projected PE, price to sales, price to book, price to cash flow. There's the enterprise value to EBITDA multiple. There's the acquirers multiple, the value composite percentile. Some of these are pretty unique to us because we extracted them from the models themselves and we allow you to screen on those. There's the dividend yield, shareholder yield, which if people aren't familiar with shareholder yield is a way that you can, it takes into consideration all the different ways a company can use cash. So it's companies can pay dividends, companies can buy back stock, companies can reduce their debt. And so shareholder yield is a way that captures all that in sort of one number. So the higher shareholder yield, usually the better. And there's a bunch of other things here as you go down. There's also some growth and profitability measures. So long-term earnings growth, gross profit margin. We have some momentum criteria, and then there's some quality. So let's try to build one. Let's try to do this. Let's go back to all sectors. So now what I'm showing you here is the list of stocks, and there's a lot that pass 5 or more models. Now let's start adding in sort of some of these criteria to see what we can get. Let's say we wanted stocks between 1 billion and 10 billion. So, or actually let's do 2 billion and 10. So basically we're looking for mid-cap stocks. So now we've added that criteria in. So now we've got a handful of mid-caps with a market capitalization of between 2 and 10 billion. So it narrowed the list quite considerably. Now let's say we want, let's just use dividend yield. Let's say we want a minimum dividend yield of 2%. So we want to be paid while we wait if the stocks don't appreciate in value. So here we got, a handful. But now let's say we said, you know what? And I also want to layer in a momentum. I want a stock that's exhibiting some relative strength over the last, let's say, month, which relative strength is a momentum indicator. The higher the relative strength, usually the better. Momentum tends to be a pretty robust factor in the sense that stocks that have done well, usually over intermediate term momentum periods, tend to continue to do well. But let's just say we're going to use our relative strength of at least, let's just say 70 here. So we add that in. It's just working here. So we now went from a list of, probably, I don't know, maybe 50 to 70 stocks, just by adding a couple key criteria that would be potentially important to an investor. We can get down to 3 stocks. What's interesting here again is this MDC Holdings, another home builder popping up. So that's interesting. These home builders are exhibiting a lot of, I think, growth and relative positive momentum and just good overall fundamentals. And the housing market is pretty strong right now. So I think that's interesting that our models are reflecting that. So that's to start. That's the overview of the Guru Stock Screener. The next thing I wanted to show you was the ratings changes. So on a daily basis, what we do is we produce Guru ratings changes. So these are stocks that are, the way you can kind of think of it is these are stocks that are on the move. These are stocks that are either moving up or down in score on a daily basis across all of our Guru models. So again, this can act as an idea generator in terms of new investment ideas for those that are monitoring. You can also kind of you can't actually, through the screener, you can't back into this, because these are stocks that are both increasing in score or decreasing in score. Using the screener, we'll show you all strong interest stocks, but we're not going to show you stocks that have moved, let's say, from no interest to strong interest, or have moved. This is a good way to sort of use the guru strategies in a slightly different way to find new ideas. So let's use, we'll use the value composite model here. And I'll just quickly explain to you what that is. If there's sort of for value investors or people that like to buy stocks that are exhibiting some relative value, our value composite investor model is based on the work of Jim O'Shaughnessy in What Works on Wall Street. And O'Shaughnessy basically tested a number of different quantitative strategies back to the mid-1950s. And these are relatively simple, straightforward strategies. But one of the enhancements that he made over the years, and specifically with the value composite model, is in the fourth edition of What Works on Wall Street. O'Shaughnessy basically came up with a way to look at a stock instead of using one value metric like price to sales. O'Shaughnessy uses a composite sort of scoring system. So he uses enterprise value to EBITDA, price to sales, price to cash flow, PE ratio, and I think there's one other one in there to look at stocks and rank them based on sort of how they rank based on each one, and then come up with a composite score. But let's say you wanted to come in and say, okay, what stocks are on the move based on O'Shaughnessy's value composite? So here I'm just in the drop down. I'm going all the way down to the value composite model. And here we're seeing the stocks that are basically moving up and moving down. So there's quite a long list, but probably easy to scan. It's actually sorted by, you see there's like, today, here are today's right here. So in terms of today's changes, it starts like right here with McKesson Corp and then goes up. So just a couple of the things, I mean, like Employers Holding Inc., that moved from some interest to strong interest. Let's see, was there another move up? There's a couple no interest to some interest. So again, this is just a quick and sort of dirty way to see what stocks are on the move, and something might strike you as interesting enough to investigate further. Anytime you click on the ticker symbol, it's going to bring you back to the guru analysis, so you can see the reasons why a stock might be shifting around in score. I'm going to now show you the My Validea section. This is basically a part of the site where you can set up different alerts. And so for subscribers, when you set up one of these alerts, we're going to email you, for example, I clicked on My Guru Strategies. So here we have the latest. This is using the ratings changes. When you set up these alerts on the Guru, we're going to send you on a daily basis, for each strategy you have an alert set up, what stocks are coming in and what stocks are coming out from these latest upgrades and downgrades. So that's another way that you can kind of keep tabs or keep track of these stocks that are changing that may result in giving you good investment ideas to investigate further. There's a number of other alerting features in here too, but really I just want to focus on My Strategies, because that I think acts as more of a idea generation tool. There is also My Portfolio, which is if you had like a watch list, or if you had an actual portfolio of stocks that you're buying, you can put in the portfolio here, and then you can get different views. So we offer, there's a fundamental view, but then you can drop down to the Guru view. This is going to show you how the stocks in your portfolio, once you populate this list, rank according to the 10 strategies that are part of the Validea Standard Plan, and then also the 10 Guru models that are part of the Validea Professional Package. So this is a quick and easy way that you can see for the portfolio stocks that you own, or you're even interested, let's say in a watch list or something, how your stocks score. And that might also be a good triggering mechanism for your buy and sell decisions in stocks that you might want to basically be allocating to, or maybe pruning from your portfolio. Okay, we're almost done here. The very last thing I wanted to show you, and I kept this for last because it's more around ETFs, but we do some analysis and screening of equity ETFs. So obviously what I've talked about over the last 20 minutes has been mostly around, or completely around, investment idea, stock ideas, using the guru models. Now we're kind of pivoting to an ETF Factor Screener that we built. So we get all the underlying holding data for almost maybe not every equity-based ETF, but a lot of equity ETFs, hundreds. And when we have that holding data, we can do different things with that. We can look and start to build sort of screens that look for stocks, or ETFs that meet certain investment criteria. So some of the general criteria we have are total assets. So maybe you're looking for an ETF that has at least, let's say, 50 or 100 million assets, expense ratio, number of holdings, active share versus S&P, and active share versus the Russell 2000. What active share basically tells you is how different does the underlying portfolio look from the broader index that you're looking at. So a very high active share versus the S&P would say the fund or the portfolio looks nothing like the S&P 500. So typically, a lot of times, most cases, you want high active share versus the S&P 500. But when the S&P becomes a very, very hard benchmark to beat, like it has in the past, let's say a couple of years, high active share may actually been more of a negative than a positive. But maybe that's a discussion for a different day. We have implied liquidity, fee for active share. You can search on the style of ETFs. So let's say we wanted to find small cap value ETFs. So now what we're doing here is we're basically saying, okay, show me in the Validea database all the small cap value ETFs. When you come down on this list, you'll now see the list of small cap value ETFs along with some important data. So I don't know, this Franklin Liberty US small cap ETF. It's got 11 million in assets, so quite small. Expense ratio of 35 basis points, 492 holdings, high active share versus the S&P. You're basically paying 35 basis points for that active share, which is good. Not as high active share versus Russell 2000, which is what you would expect. And then we have some exposure factor exposure rankings here. So it ranks very high in the size exposure because it's a small cap. It ranks decent on value, so it's not really ultra high on value, but 62 is decent in terms of its percentile ranking. It gets a little bit below average on quality, has a low momentum exposure, and pretty low volatility exposure. So as you sort of use this ETF screener and get familiar with these, what these things would mean and how you can use them, this can be a pretty valuable tool in terms of, finding ETFs that might be attractive to you based on what you're looking for. Let me just clear this criteria and show you one other thing here. And then I'll take some questions if there is any. We have some pre-built screens. So this is, if you don't want to build it, but you're interested in, let's say, the stocks with the most, you could do stocks with the most value exposure, stocks with the most quality. Let's look at momentum. I'm sorry, I keep on saying stocks. It's really ETFs. ETFs with the most momentum. Oh, this is actually value momentum. I'm sorry. So let's do most momentum. So if we add that, now what you're going to be seeing here are the ETFs that have basically performed the best over the last 12 months. I think we're using intermediate term momentum for this ranking, which is basically the 12-month return minus the most recent month. But you're going to see names that you may not be familiar with these ETFs, but what you're seeing here is a bunch of, technology, this disruptive commerce ETF, the Invesco 500 momentum portfolio, the Innovator IBD breakout opportunities ETF, the Invesco DWA technical leaders portfolio. So we're getting results that we would expect because we know that in the past 12 months, the best performing segment of the market has largely been these technology names, these, mega cap tech stocks and other sort of companies that are maybe benefiting from the shutdown with technology, and seeing their business benefit from that and stuff like that, and innovation stuff. So that's that's just a quick overview of how someone would use the ETF screen. I'm really just touching the surface here, but it's pretty neat to be able to screen on factor exposures and kind of drill down deeper into ETFs that might be attractive to you based on the things that you're looking for. So with that, I will. Yep. Okay. So, okay, this is a great question. So, can you comment on how you would use the Guru stock screener and analysis during different stages of the economic cycle? That is really a good question, and that becomes a little. It's kind of, we don't want to make too many like macro calls, but I know that's not really what you're asking. But I would say what tends to happen usually in your typical economic cycle is value tends to do really good coming out of the very depth or the bottom of the bear market. So typically value stocks are hurt the most going in. They're the most economically sensitive. But once the bottom is put in and you come out of that, and typically with the Fed and they lower interest rates, it makes borrowing costs for those companies that do require maybe a little bit more debt to be able to shore up their businesses, the ones that survive. And so you tend to get this sort of accelerated performance out of value stocks, early on in the cycle. Coming out of a bear market. And then as that matures, you usually get better performance out of growth and momentum names later on. They're like, if you think about like since the great financial crisis, you had a really good period for value coming out of that. So let's say 09 into 2010, and then you had it cool off, and then basically growth was doing a lot better. Seemed like it was a maturing bull market at that point in time. But then you had in 2016, after the Trump won the first time, whether or not he's going to win the second time, we don't know yet. But value actually did very well in late 2016 for a short period of time, and then since then it's obviously kind of just been all growth. So I think that there's some pretty strong evidence to say value early on, and then as the cycle matures, using some of those growth and momentum strategies could be beneficial there. Yeah, somebody's asking, and this is another good point. We used to have a agreement with NASDAQ where some of the Guru strategies were available on NASDAQ.com. They licensed the content, and NASDAQ recently redesigned their site. They basically went to a very skinny research offering. We are in talks with them about doing some stuff with the Guru stock screener there, but that's more of a long-term sort of deal and partnership. That's probably not going to happen anytime soon. So right now, this Guru screener essentially only exists on Validea. There is a question. We do have a Validea Canada site, and there is a question around there's not as many strategies on Validea Canada, and the ETF screener is not on Validea Canada. That's something we'll take into consideration about maybe rolling these strategies out on Validea Canada. But just truthfully, right now they're probably going to stay at least in the short to midterm on the U.S. site. Just from a resource perspective, bringing those over to Validea Canada is not something that is in the pipeline, at least right now. So I'm sorry about that. Okay. So what I'm going to do is I appreciate most people hung in here with me. So I'm going to, everyone that took part of this presentation, I'm going to figure out just a random way to select one name. I will be in touch with you. I'm going to send you a copy of John Reese's book, John and Jack's book. Let me get it here for a second. Hold on. So I'm going to send you a copy of the, I don't know if you can see the cover here. It's called The Guru Investor, How to Beat the Market Using History's Best Investment Strategies. And in this book, we outline 10 of our more popular strategies, from Benjamin Graham to Warren Buffett to Peter Lynch to Joel Greenblatt, Martin Zweig, Ken Fisher, Jim O'Shaughnessy. And so we talk about sort of step-by-step the criteria used in each one. So I'm going to enter your names in a drawing, and I'll just pick one randomly, and then I'll send you the copy of the book, but you'll be hearing from me once I select a winner. And this will be recorded, so I'll send you guys a link to the video too. And if you want to sort of rewatch it, or even watch any of our demonstration or tutorial videos on the site, those are all free to watch. And then lastly, I am the co-host of an investing podcast called Excess Returns. You can find that on YouTube and or Apple Podcasts. We talk about a lot of different investing concepts and strategies and different themes. And we do also do interviews with a bunch of interesting people on there. So if anybody's into podcasts, we really appreciate any support that people can give us. So yeah, and if you want the book, you can buy it right on Amazon. If you don't win, somebody just asked how would we buy the book. The book's available on Amazon. So, okay, guys. So thanks so much for joining me today, and keep on the lookout for future webinars. I think what I'm going to do is the next one's going to be on our model portfolios. I'm trying to do like a series of webinars where every couple of weeks we pick one portion of the site to focus on. And so I think the next one is going to be how we actually take these guru strategies and build investment portfolios off of them. So stay on the lookout for that. Okay. You guys have a good day, and thanks so much. See you soon.